Good morning, everybody. This is the Live Market Open for Monday. Happy Monday, everybody. This is February 15th already. Hope everybody had a nice Valentine's Day yesterday. And today we have lots of things to talk about. As usual, we'll talk about recent developments in markets, what happened on Friday, what happened over the weekend, charts and levels in the next 24 hours. Good morning, everybody. I see a few of you in the room. Jax, good morning. I might have missed that link. If you can put it on the chat, that would be great. I guess it's relevant for everybody. Anyway, if you cannot see the chat box and you're seeing the video, please go to the address on the screen, tlk.io/fx3-forex-live-video. So what's going on in markets in general? We're in happy days, okay? We've seen Asian stock markets leap. China did some catching up and dropped, but just a bit. China was on holiday all last week. You couldn't blame China for the big mess we had last week. But it fell only a bit in comparison to what we've seen in the US and Europe in Asian markets last week. But in Japanese markets were up. I think also Europe opened with big gains. All in all, very positive atmosphere in markets. Okay, over the weekend we had more talk about OPEC doing something. Oil prices are still low. Of course, we had some recovery there, but it's still extremely low for many countries. And in the UK, we had lots of talk about the EU summit this week. What does David Cameron get? Will he have enough support in his party? As of course will influence the pound going forward. And that was today. Let's look at the charts and show you what it means when we talk about a positive mood. So we're seeing this is euro dollar. It's falling this morning, already 40 pips down, extending the losses from Friday. Euro is a safe haven currency, and when things are good, there's no demand for the euro. 112 is some kind of support. It's a bit choppy out there. 110.70 is very strong support. Resistance 113.75, which is a veteran line, and the peak also seen last week. Okay, another safe haven currency which is out of favor is the Japanese yen. Last week we had a huge tumble down of dollar yen. In general, the yen soared across the board. We even had this spike here, which looks like an intervention by the Bank of Japan. Okay, they didn't like the pair falling to the 110 handle. We fell to just under 111. In general, all the safe haven demand markets tumbling down last week. We saw the pair collapsing despite the fact that just 2 weeks ago, on January 31st, Bank of Japan introduced negative rates. But now, better mood in markets, less demand for safe haven yen. The Bank of Japan must be smiling. Okay, so we've topped 114. Now we're a bit down, but in general, the atmosphere remains positive. We're still higher than we were before. Since Friday. Also on Friday, we had some recovery of dollar yen. As the show begins, we're seeing a small drop in dollar yen and also a small rise in euro dollar. Maybe the mood is worsening just a bit, but I see it only as minor moves within the charts. What happens when the mood improves in general? Well, not in the past hour. Again, all this talk about Cameron not having enough support perhaps might be weighing on the pound, but in general, the pound is on higher ground above this level of 143.65. On the top side, we have 146.45. Some kind of support here at 144.50. But in general, the pound also is a bit higher. Again, there is talk that David Cameron does not have the sufficient support. Most of his party supports him, but not as much as he had expected on this EU deal. But with other commodity currencies, the mood remains positive. We're seeing dollar CAD slide quite a bit. Look at this very nice support line here, 137.87. It worked not only in recent weeks. Let's see here. Last week it worked. This time it worked, and it's been with us since it worked actually as resistance back in December. Okay, so it's a very important line for dollar CAD. Not a shabby currency pair to trade. Okay, above we have 139.05, which is not as strong as it used to be. The round number of 140 works as strong resistance. Okay, when we talk about CAD, we talk about oil. Oil reached new lows last week, reached $26 on WTI crude oil. Since then, we had a big recovery, most of it on Friday. And now we're seeing sort of an extension of this move. Well, some of it also recently. Anyway, still shy of the $30 level, but perhaps the talk of OPEC, but mostly I would say the better mood markets certainly supports the price of this black gold. Let's go back to currencies. Aussie dollar, very nice rise. Okay, 71.47 at the moment, above this level of looks like a nice separator of ranges 71.40, further resistance 72.20, further support the round level of 70. Okay, the Kiwi dollar, well, basically in range in comparison to last week, but this morning it's moving higher, 40 pips higher, higher within this range of 65.80 to 67. Last week we've seen it even challenging 67.40 before falling down. Had good news from New Zealand, not last week, but in the previous one. And this week we also have quite a few events for New Zealand. Okay, let's continue. Dollar Swiss, suspected intervention after we had dollar Swiss fall a lot, and of course Euro Swiss fall a lot from the highs. We've seen the pair moving back up. So maybe 96.40 is there. Well, some kind of resistance. 98.20. Sorry, 96.40 support. 98.20 resistance. The line of parity also worth watching. Euro Swiss hugging the 110 level. Very, very peculiar. I suspect there is some kind of intervention. We've seen in general Euro Swiss move all the way up, suspected intervention up to 112. Then perhaps the Swiss National Bank let it go, but with the worsening mood last week, perhaps they intervened once again. Euro Yen also recovering. We've seen that the Japanese yen is a stronger safe haven than the euro. When we've seen markets deteriorating last week, the yen was the big winner. Euro was sort of lagging behind, still gaining against many other currencies, but not against the yen. Now we're seeing it back in the previous range. It found some support at 126, some resistance at 128. It's becoming a bit more messy, this pair. Okay, so it's a safe haven cross. And when the mood improves, pound yen improves, right? So we had it fall last week all the way to 160. We were nearly 500 pips above those lows. Quite a roller coaster pair, this pound yen, the dragon, the gepi. Okay, further resistance 166 and then 168.50, I would say. Anyway, it's quite a roller coaster pair. I know many traders like it for this feature, but remember, something that moves quickly helps with gains, but also with losses. All right, so okay, so we talked about all the major currency pairs and crosses. Looking forward to your questions. And let's talk about other things that happen in markets. Now, I say happy days and good mood, and this comes in contradiction, okay, to the news we had this morning out of Asia. Okay, let's jump to this morning in Asia. We learned that the Japanese economy contracted once again. Okay, it's not a recession because the economy did grow in Q3, but in Q4, according to the preliminary data, and revisions are quite common in Japan, like in the US, unlike Germany or the UK, we had a contraction of 0.4, worse than expected. Let's look at the FX Street calendar here on Forex Crunch. Why did that happen? Sorry about that. So on a quarterly basis, we had expected actually a rise of last time we had a rise of 0.3, this time a fall of 0.4. Also, year over year, we went from a rise, the annualized figure, well, it's basically the same, but also year over year, growth rate has slowed down from 1.8 to 1.5, okay? Not really good news for Japan, okay? This might mean more stimulus from the Bank of Japan, and this could be seen as a positive by markets because if things are bad, the Bank of Japan intervenes and then it's good. But this logic is, of course, a bit twisted because the power of central banks has been limited of late. I mean, they're doing so much. Not everything works, okay? But perhaps we'll also have some fiscal stimulus, okay? And also we had bad news from China. China came back from a week-long vacation. The year of the monkey is at full speed already. China is back to business, and the data from China hasn't been good, okay? No, let's not look at the bottom line trade balance. What's important is the level of exports and imports. So last time we had exports falling 1.4%. This time they fell 11.2%. It's not good news. Now it might be a bit skewed by the new year in China, and that's sort of the perhaps silver lining, but in general it's not good news. Also, if you look at imports, same here. So for Australia that exports stuff to China, commodities, a fall of 18.8% year over year in imports is not good news. Triple the fall, or more than double the fall seen last time, okay? So actually we had bad news in Asia this morning, but this doesn't stop the better mood in markets so far, okay? Let's go back to what we had on Friday. Friday we had really had good figures that in the United States at least, okay, not everything was good, but at least most important figure was good. So let's begin from what we had. We talked about this already on Friday, but anyway, German GDP missed year over year, but was okay month over month. It wasn't a big surprise, but if you expect Germany to lead the Eurozone recovery, the Eurozone growth, it's not really there. It's not good enough. Eurozone GDP came out as expected. Both figures for Germany and for the Eurozone both came out at 0.3%, quarter over quarter, around 1.5% for the Eurozone year over year. Very mediocre growth, okay? The bad news came from industrial production, which dropped more than expected. Again, GDP is more important, but as it came out as expected, this industrial production figure wasn't that good. Now, also here you could look at good news. At bad news is good news, because also the European Central Bank is set to meet in early March and introduce more stimulus. Now, last week we heard from Jens Weidmann, the head of the Bundesbank, the German central bank, which is usually very hawkish, afraid of inflation, of the demons of inflation, even though there isn't any in the Eurozone. And he also opposes Draghi a few times. The Bundesbank even took the ECB to court, okay? The German court, objecting this kind of what the German central bank sees correctly as monetary financing, perhaps, but it's quite needed, especially as governments are not doing their part. Anyway, what I want to say that there's lots of support, and these figures provide even further support for ECB action in March. So that's also good news for markets, bad news for the euro, if you want to look at it that way. We finally had some good news from the US retail sales. The US economy is all about consumption. Well, not all, but a lot about consumption. We had so many poor figures in 2015, so many disappointments in retail sales. Finally, we had good figures, okay? And we had all the figures coming out better than expected, plus upwards revisions, okay? So actually, these were even better than expected. One notable thing to say is that the control group was expected to rise 0.3. It actually rose 0.6. It's sort of the core sales, okay? Excluding cars, which are car sales were good, excluding gasoline, which also makes things a bit more messy because of the big fall in prices. So excluding many other things, it was up double than expected, but also other figures were up. Consumer confidence for February, the preliminary figure from the University of Michigan missed with 90.7, but that did not dampen the mood on Friday. I think we've talked about it already on Friday morning, that suddenly things began looking better. Markets decided that perhaps it's oversold, perhaps we're getting a bit too far with this gloomy mood. We had last week bad news about Deutsche Bank. Worries that they cannot pay their debt. I don't know if it's true or not. I can only say that I'm sure that if they are in trouble, the German government will bail them out. So I don't see anything to worry about that. Of course, worries about commodity exporters, commodity companies, worries about Chinese economy, even though China was closed. You name it. And the Federal Reserve sort of saying it's not our fault. The rate hike we did in December is not our fault. Now, during the weekend, an ex-Fed member, which has a lot of criticism about the Fed's loose policy, said the Fed should have tightened back in the past. But look, this is bad luck for Yellen. She raised rates, and then it's not her fault that what's going on about China commodities. So please don't blame her. It's more bad luck. Anyway, what I wanted to say is that the markets got a bit too carried away last week. Now we're seeing a correction. The big question is, will this better mood prevail? Or perhaps markets will look at the trade balance of China and will look at poor industrial output in the Eurozone. The global economy hasn't improved in the past 3 days, okay? What did happen is that the mood that overreacted to one direction now is going to the other correction. This might be a correction in the bear market. I don't know. We have also quite a few events this week from central banks that could shape up expectations. Last week I talked about some markets a bit losing the faith in central banks, markets feeling that, look, Draghi created huge expectations in December and didn't deliver. The Bank of Japan made an historic move to go negative, and markets didn't buy that. Eventually, the yen strengthened a lot. The Federal Reserve, Janet Yellen went to Congress, tried to soothe the markets, to say, don't worry, we're doing everything gradually, and it didn't convince markets, okay? Now, perhaps the faith is back. Keep the faith, as the Bon Jovi song goes. I don't know. At least that's what's going on for now. Let's get back to today's events. Here we are. Okay, first of all, China is back from holiday, but the US is on a light holiday today. It's President's Day in the United States. That means that bond markets are closed and stock markets are closed, okay? It's not really a big holiday when everybody's on vacation. It's just markets are closed. That means we can expect lighter liquidity on the US session. And perhaps already now in Europe, it's not as strong as it usually is. Nevertheless, at 2 p.m. GMT, Mario Draghi, the head of the European Central Bank, testifies. He might repeat his previous speeches. Let's look at Eurodollar. He might repeat his previous speeches that they're ready to act, that it's better to act than not to act, and they'll do a lot more. This time, what's different is that he has the support of the German Central Bank more than he had beforehand. So maybe he'll say even something bolder. Okay, and there's enough time between now and the ECB's meeting in early March. Okay, so that means that allows for he can still speak freely. It's not in the quiet period. Okay, he can say what they're expected to do. He might lift his rhetoric, say something even more dovish than usual. All right, and especially take advantage that the euro is down and hit it when it's down. Okay, central bankers have much more influence when they're going with the trend than trying to move against the trend. Of course, there are exceptions, the whatever it takes speech from 2012 from Draghi, but when he wants a weaker euro, it's easier to hit it when it's down, to sort of squeeze everything out of the move. Okay, so that's the big event for today. I think we had the Draghi hitting the euro in the previous rate decision in late January. Since then, he repeated his speech several times, but had little impact. This time, I think he can have more impact because first he has the support of the German central bank, and secondly, the euro is weaker. Okay, and he wants an even weaker euro, of course. Next up, well, it's holiday and we don't have too many events in the European session. Maybe we'll take a look at that, but well, you have the Eurozone trade balance at 10 GMT. Usually has very, very little effect. The Eurozone has a big trade balance surplus because of German exports mostly, but not only that. Okay. But then the focus, I don't know how many of you trade at night, but we have, for those who are trading the Kiwi, we have New Zealand retail sales at quarter to 10 GMT. It's a quarterly release in New Zealand, okay? Only once every 3 months against once every month in most countries, including their neighbors, Australia. So it's a big event. For those trading the Kiwi, of course, I know it's not the world's most traded currency, to say the least anyway. Headline figure is expected to rise 1.4 after 1.6, and the core figure 1.1. The headline figure is more important in New Zealand in this case than the core figure. All right. RBA meeting minutes. They had a vacation in January, but in February they met again, left message mostly unchanged. Let's see if in the meeting minutes they say something that is more worried about China or happy about the Australian economy. That could, of course, have an impact on the Aussie. And more from New Zealand, the 2 GMT inflation expectations. This sort of fills the gap. Also, inflation figures are published only once per quarter in New Zealand. So these inflation expectations, which are published every quarter, and in the middle of the quarter, I mean, sort of detached from the CPI figures, they provide another insight on inflation and the guidance for the next move by the central bank. Okay. So these are the events for today. I know not much on the agenda or hardly anything in Europe. Still a big event with the testimony of Mario Draghi coming on relatively lower liquidity because the US is on holiday. All right. And we have 2 GMT. Yeah, so that's the main event for today. Any questions? Perhaps we'll talk about more events that we have this week, as we did also on Friday, and perhaps we'll talk about other stuff as well. So okay, what else do we have this week? So today we have we already had Japanese GDP, worse than expected. Chinese trade balance, worse than expected on imports and exports. Will everything be worse than expected, and will markets continue rising and hope for central bank intervention? Is the faith back in central banks? That remains the big question. Tomorrow we have the UK inflation figures. Of course, headline inflation is what guides the Bank of England. It has been quite weak because of oil prices. Core inflation has been rising a bit, but not enough. Of course, this will have a big impact on the pound because it impacts the Bank of England. Anyway, no rate hikes are expected anytime soon. All right. We also have the German zoo economic sentiment. There we're expecting. They were expecting a fall almost to zero. Okay, so inflation expectations, business sentiment in Germany is expected to slide quite a bit. We don't have that here, but sentiment is not as good as it used to be. All right, let's move to Wednesday. Wednesday is a busy day in all time zones, more or less. We have the UK jobs report, focuses on wages. wages with bonuses, without bonuses. Both things are important, especially, and also the state of the unemployment rate, jobless claims. In general, we're seeing a slowdown in wage rise, but still a very healthy jobs market. That means the unemployment rate is down. People are working more, but their salaries are a bit stuck. We've seen some kind of acceleration in the UK during 2015, but that acceleration is gone. All right. Housing figures from the US, housing starts and building permits. Last time they went in different directions, so it was quite confusing. Let's see what happens now. And then at the same time, producer price index, sort of a warm-up for the consumer price index. But perhaps the biggest event on Wednesday is the Fed meeting minutes. They're a bit stale. As always, it's from the meeting that was held nearly 3 weeks ago in late January. So we're still not... since then, we had more developments. We had the jobs report. We had markets going belly up, recovering. Anyway, it still might give an indication if March is on the cards. As I showed you, well, these are the expectations for, well, let's refresh this. But in general, bond markets are not expecting any rate hike anytime soon. Okay, so this is for March. It was almost 100. It was a full 100% on Friday. Now it's only 96%. But if we just do fast forward with bond markets all the way to the extreme, also in February 2017, also in a full year from now, 61% probability against any rate hike. Okay, so I wonder if meeting minutes will change that. They could be a bit more positive than markets expect, because markets got a bit carried away with the big sell-off and the doom and gloom and all that. Okay, so that's what's going on in for the Fed. On Thursday, for those of you trading the Aussie, we have the Australian jobs report. The last 3 reports were really good. Let's see if the trend continues. And oil inventories delayed from Wednesday to Thursday because of the US holiday today. 2 things to watch there. Not only the crude oil inventories, we already learned that the distillates figures are also of high importance. Anyway, there's still too much oil sloshing around. The better mood lifts oil. There is this good correlation between oil prices and stock markets. Remember, oil moves by supply and by demand, not only by demand. I mean, when oil prices fall, it sort of reflects poor demand and the whole global economy is going down. It's not always true. We just have too much oil sloshing around. This hasn't changed too much. Production perhaps is grinding a bit down, but the level of but there's still too much oil out there. Saudi Arabia is at peak production. Also other countries, perhaps a bit less in the US, but still the US shale industry is far from collapsing. Okay, last week there were rumors about Chesapeake, that they're struggling, that they have hired a consultancy firm for going bankrupt. These rumors were denied. The markets believed these denials. They made sense. But remember, the oil prices are still low and there's still too much pressure on oil prices. So that's oil inventories. And yeah, we have euro dollar during the show sliding under 112, losing a round number. It's still a battle going on over there. 111.96 is the low so far. Anyway, this reflects a better mood in markets. Better mood means weaker safe haven currencies, weaker yen, weaker euro. Well, in the yen, it's a bit less pronounced. In the past hour, we're not seeing big moves over there. Let's continue with this week's events. On Friday, we have the UK retail sales, and perhaps a nice close to the week with CPI in the United States. The Federal Reserve talked quite a lot about inflation. It began in December when the rate hike, they said that was sort of their sweetener. Okay, they said we're raising rates because we're seeing an improvement in the economy. in the employment market. We want to preempt any kind of heat, seeing the economy heat up, being able to cut rates if necessary afterwards, and also being able to, not have to raise rates too far. On the negative side, to sort of tell markets, don't worry, we're moving very gradually, they did express a lot of worry about inflation. In January, in the following meeting, they repeated this stance once again. Okay, so let's see if inflation picks up or not. Remember, headline inflation moves quickly in the US because of oil prices. These are figures for January, and I expect the headline figure to be slightly weaker, even though year over year, also January last year, we had a big fall in oil prices. But core inflation, it actually ticked up in recent months, reached 2.1%. Let's see if it moves up just a bit. So it could be sort of the grand finale of the week with US CPI. Any questions? Now, euro dollar is still sticking to 112, not losing it very, very fast. Moves are a bit slow this morning. Dollar yen under the highs of 114.09. It reached this morning. Pound influenced by headlines in the UK. We have, well, I should put it on the chart as well. We have on the later this week, on the 18th and on the 19th, the EU summit, Thursday and Friday. Let's see if he gets enough support from his Eurozone members for a deal, and also from his own party, David Cameron, in the UK. Any more questions? Okay, maybe I'll keep you up to date a bit on politics in Spain, as we have a few spare minutes. If it's that's of interest. No, perhaps let's look at other currency pairs that we usually don't talk about. Aussie Kiwi. For traders down under, this is an important currency pair. This cross between the two antipodian currencies, the neighbors, okay, it's about 1,500 kilometers between two countries, but they have a similar culture and a similar geographic position. Anyway, we've seen the pair fall quite a lot. This reflected the fall of the Aussie and the strengthening of the Kiwi, of course. We've seen better than expected figures in New Zealand and news from China weighing on the Aussie, but we found some support over there at 105.60. And that's an interesting line, actually. Yeah, so if you're trading Aussie Kiwi, look how nice this support line works. Well, not perfect, but quite well. Followed by 104. 105. Okay, 105 is a very round number. We've seen it in the past few days jump from the highs, jump from the lows. Is it a correction? Is it a change of trend? I see New Zealand is stronger than Australia in general. I mean, the trends are better there because New Zealand exports milk, which is a soft commodity in comparison to the big commodity crash of iron and copper, which Australia exports. But the Australian economy is not doing that bad. We've seen that the weaker Australian dollar does help other industries in Australia. Australia is not only about mining. So Anyway, 105, 105.60, this kind of range is support, resistance, 108. Okay, and very strong resistance, 110.40. Right. Let's look at other currency pairs that may be of interest to me. I know many of you are interested in gold. Okay, gold enjoys bad mood. It's like another safe haven. You can put it alongside the euro and the yen. This is a daily chart. We had so many long days. 1, 2, 3, 4, 5, 6, 7. Well, let's count this. 8, 9, 10 days, 10 trading days of rises in gold. We've seen the price reach cross 12.16. This morning it's falling, also on Friday, and also today it's falling quite a lot. That means that reflects a better mood in markets. Okay, so gold is only about speculation. When things get bad, when central banks are ready to intervene and paper money seems to be worth less, then gold is sought. But there's much less speculation about gold than we had in 2011, for instance, when prices got close to $2,000 an ounce. Anyway, if things stabilize, I believe gold will sort of grind its way down. But it's too early to say if the mood has changed for quite a while. I think that Draghi could provide more hopes of stimulus today, but perhaps the meeting minutes on Wednesday from the Federal Reserve, despite them being stale, could show that the Fed is still sort of thinking about hiking this year, something that isn't priced in, and this could perhaps dampen the mood and help gold prices. Okay, but anyway, I don't like. I prefer currencies over commodities. Yeah. Meanwhile, better mood in markets. We're seeing euro dollar slide a bit more. Must say I'm very happy with the movements we've seen starting 2 weeks ago in euro dollar, because it was so frustrating. These currency pair movements were so limited, and finally we're seeing euro dollar on the move. It went a lot to the upside. Now it's falling. We're already nearly 200 pips from the highs seen last week. Okay. So you guys are a bit quiet this morning. Anyway, let's talk. It's almost time for the wrap up. Just take another look at oil. 29.06. Basically balanced today, but in general above the lows. Last week we had a big crash. Let's put things in proportion just a bit. This is the big crash of 2015 and 2016, which seems small in comparison to the big crash we had at peak here. One of the peaks in June, and then beforehand we're at almost 115 here. In the bigger scheme of things, we had a long period of high oil prices. Now we're back to the crisis levels, okay? To levels seen in late. Far from that, we fell below the levels of the financial crisis, and now we're back to the levels seen the beginning of the millennium. Well, we can always go lower. In 1999, oil prices touched $10 a barrel, and in 2001, they were under $20. This is quite a shock for the world. Changes the wealth distribution and other things. Okay. So, I guess it's time for the wrap up for today. This is the wrap up for the live market open on February 15th. It's Monday. Happy Monday. Markets are very, very happy indeed. We've seen China catching up and falling just a bit because markets fell a lot last week. But in general, Asian markets are moving higher. European markets are moving higher. Today, the United States is closed due to President's Day. No bond market activity, no stock market activity. But it's a light holiday. More talk about OPEC doing something, but I must say that does not really move oil prices. It's more the better mood. And there are headlines over the weekend around the EU referendum in the UK, worries that Cameron will not have enough support. But we had bad data this morning from Asia, and it was ignored by markets. So we had the Japanese economy contracting. Once again, if we have another quarter like this, it's a recession. Nevertheless, contraction worse than expected of 0.4 was ignored. Chinese trade balance missed on imports and exports. It could be skewed by the new year, but still not so good news. Okay, let's get back to what we had on Friday. We had most data was negative, apart from US retail sales, which came out much better than expected. On all fronts, they beat on all the various core figures, and they were accompanied with upwards revisions. Also good news. Okay, and the old continent, we had sort of mediocre GDP figures and weak industrial output figures, and that didn't move much markets today. We have on the agenda, we'll hear about that and other stuff from Mario Draghi, the president of the ECB. He testifies starting from 2 GMT in the European Parliament, and now he has a better chance of saying something even more dovish. Why? First of all, it's easier to hit the euro when it's down than when it's moving up. It's harder to work contra trend. And he has more support for more action from the German central bank, something he didn't have until last week. Okay. Also today, later on the agenda, we have, for those who are trading in New Zealand and Australia, retail sales in New Zealand. These are quarterly figures. They have more impact. And then inflation expectations. Also, they complete a gap because inflation is released only once per quarter in New Zealand. And we have the RBA meeting minutes. We had a very balanced rate statement in February. Now we'll get the meeting minutes. Let's see if it rocks the boat just a bit. Let's look at charts. Better mood means falling euro dollar, and we're seeing it also during the show. Fall below 112, nearly 200 pips already from the highs seen last week. The mood began improving on Friday morning, is continued into the afternoon, and is now in full force today. Okay, same thing for the Japanese yen. We also had some kind of intervention. This kind of spike here is an intervention in the Japanese yen to weaken it by the authorities in Tokyo. Also this morning, a stronger dollar yen, weaker Japanese yen, better mood in markets. 114.25, 115.25 are lines of resistance. Support is at 111. Euro dollar, I didn't mention levels to watch. I would say 110.70 is very strong support. 13.75 is strong resistance. Okay, but we have a lot of movement in between. Pound dollar, a bit worried about the headlines, so it sort of bounced, not really taking advantage of the positive mood. Support 144.50, resistance 146.50. Further support 143.65 and 142.30. Dollar CAD, bouncing a bit from their strong support there at 137.87. Further support 137.20. Resistance, strong resistance at 140. Okay, better oil prices support the Canadian dollar. Australian dollar 71.44 at the moment, resistance 72.20. 71.40s turns into weak support, much stronger support at the round number of 70. Okay, also enjoys better mood in markets. Remember, despite the fact that we learned that China imports less stuff, and that means less stuff from Australia. Kiwi dollar has quite a well-defined range, 65.82, 67, currently in the higher end of this range, also higher on the day, enjoying the better mood in markets. Okay, so I guess that's it for today. Is the chat working? Jax asks. I think so. Anyway, I hope you guys have been. Don't know why you guys have been quiet. It's not usual, but anyway, I did all the talking. Anyway, wish everybody a safe and successful trading day today. These are the events. Relatively quiet, but Draghi. Let's make it bold here, because Draghi has the ability to move markets. Okay, so again, wish everybody success. Volatility remains relatively high, and we'll be here tomorrow to cover what happened and what will happen tomorrow, which is going to be a busier day. Okay, so that's it for today. Thank you and goodbye.